Hey everybody, JC Parets here, and boy, do we have something special for you here today. Some of you are here a little bit early. We got a few minutes before we bring on the big name. But I wanted to kind of come here and tell you a little bit about kind of my perspective on everything, because you guys know me personally as the technical analyst, right? I mean, that's what over the years I came up in this business as a technical analyst. Got my CMT designation throughout 2006, '07, finally finished in '08. Nice timing there, right? Right before the great financial crisis. Not bad. Good timing. Good timing. Boy, did that help me out a lot. And, early on in my career, in 2004, 2005, I was actually looking at the earnings themselves, right? And, for those of you who've tried to trade earnings in the past, there's a lot of wrong ways to do it. And I can tell you, I have been one of the people who have done it the wrong way in the past. But I could also tell you that if you talk to anybody successful in this business, they've gone through it. They've seen the pain. They've seen and experienced the wrong ways to do it. I remember back in the day, in my late 20s, I'm on TV every day. Every day I was on a different network. I had a lot more time on my hands back then. I lived conveniently in Midtown Manhattan. My office was on 44th Street and 5th Avenue, 4 blocks away from News Corp, 2 blocks away from the NASDAQ, right? CNBC over in Rockefeller Center in the GE building or the Comcast building, whatever it's called these days. I mean, everything was kind of right there. So I was on TV a lot. ABC over on the Upper West Side. I mean, I was doing the thing, but I didn't know. I thought that's what I was supposed to be doing. And, a lot of the conversations that I was doing on the TV, was about earnings. I remember hosting CNBC Fast Money in the NASDAQ in Times Square. And it would be there'd be companies earning. Oh, what do you think? I'm like, I don't know. I don't know anything about corporations. I'm a technician. I'm looking at the behavior of asset prices. I don't know anything about earnings. So I would go on the TV and I would tell them what I think based on the price behavior, not so much the earnings. And they seemed to like that. So that worked out well for me. But at the end of the day, I've always wanted to figure out a way to capture profits from the volatility that comes very consistently around earnings, right? In the old days, 20 years ago, right, I would be like, oh, this is a great company. It's a great company. They got earnings coming up. They're going to beat earnings. It's a great company. They're going to beat earnings. So, and I was so confident about it, right? How do we make the most amount of money? If we're right, well, we buy call options. Let's do that. So buy call options on the stock. It's a great company. They're going to report earnings. We're going to make a lot of money. Easy peasy, right? Come on. So then the company comes out, reports earnings. They beat on the top line. Revenue number beats all estimates. Great. Who's better than me? Then the bottom line, the earnings. Oh, they beat the earnings. Who's better than this guy right here? Next, Warren Buffett right here. No big deal, right? And then what happens? The market doesn't care that they beat earnings, right? Because as it turns out, it wasn't that the analyst was right or the analyst was wrong, right? The company did what the company did. It was the analyst that missed it, and not the company. The company was just doing what the company was doing. So the market penalizes the company, right? Company beats the analyst estimates on the top line, beats analyst estimates on the bottom line, and the stock sells off. And the options get wiped out. The options are zeros, right? You lose it all. What happened? It was a great company, and it was a great quarter. And of course, the analysts, right, hilarious. And the analysts call afterwards, hey, Mr. CEO, great quarter. That was a great quarter, guys, right? That's how they talk. That's like a thing. Like they're very nice to the CEO, and then they come back with a hard question, right? Hey, guys, great quarter, right? If you listen to these conference calls, and I used to, I don't anymore, but I used to back in the day. And so I know somebody who I'm about to introduce you to that loves listening to analyst calls. Loves it. Couldn't get enough of them. Hey, we're all different. We're all different. Some of us like, sushi. Some of us like, cooked bronzino, but we all like fish, right? It's all, to each his own. But to me, earnings is a very consistent way to be able to find increased volatility in the market. And volatility is not a bug here. It is quite the feature. And there is no other environment in the market that is as reliable as an earnings release to bring increased volatility and therefore opportunity. That's all it is, right? Increase, more movement just means more opportunity to make money, right? And we know that. Like there are some areas where you know there's going to be volatility at some point, but you don't know when, right? Maybe commodities or the VIX is going to go crazy. Like there's just, cryptocurrencies, like they're all going to Forex markets. Like there are certain assets where volatility is essentially a feature. You look at high beta stocks. There are higher volatility equities by definition, right? Versus a low volatility stock. So there are going to be pockets of movement in all of those areas. We know that. It's the when. See, it's the when that's different here. Because you know the when, you know the what very consistently. It's the only place in the market where that's the case. So if we know that, then there has to be a way for us to profit from that consistent spike in movement. There has to be a way, right? And I know a lot of traders over many years, myself included, right? Story time with JC over here. Buy the stock, buy the option. We're quote unquote right. Yeah, the company beat and they guided higher and they still sold the stock off, but it was a great quarter, right? That's always the excuse. But they did great. That's, no, clearly they did not. The market is telling you that they did not do great at all. And by the way, you see it on the downside too. It's a terrible company. Oh, they're doing everything wrong. Shorting the company going into earnings. This thing's going to fall off a cliff. They miss on the earnings, right? They miss on the revenues. They just miss everything. They guide lower. Couldn't have been worse. As Steve Strazza, who I'm about to introduce you to, likes to say, they throw in the kitchen sink, right? It's going to be so bad that is anything possibly bad, just throw it in there too, because what's the difference, right? So at that point, all the bad news is out. And the market, the market is a forward-looking discounting mechanism. And so a lot of times, you're making the bet the stock's going to fall when it misses earnings. And in fact, it does. They guide lower. The kitchen sink, as Strazza says, everything's out. And the stock rallies. The stock rallies. Because who's left to sell? It's not about the earnings, right? It's not about the revenues. That's not what it's about. It's about the positioning. It's about the market. And understanding that with these higher volatility events, right, with these types of times in the market where investors are very focused in on something and mispositioned, those unwinds are massive, right? So there's got to be a way to take advantage of that if we know it's coming. So in what direction do we bet? How do we weigh all the information to put ourselves in a position where we can make a lot of money? Right? That's the question that many of us are trying to answer. And actually, it's 2:00 as we speak. So ladies and gentlemen, if you just got here, I am JC Parets. I was just going on a rant about earnings and how every single season, 4 times a year, these stocks are going to be reporting their earnings, and there is very consistently a high degree of probability that there's going to be a big move. And we have the what and we have the when. Right now, it's just picking which ones we want to participate in. Right? Can't kiss all the girls. Right? Got to figure out which ones you want to participate in. And then how do we execute? Right? Like, what is the vehicle of choice in which we can express a bullish or bearish thesis in a particular scenario? Right? So, guys, I'm about to bring on Mr. Steve Strazza. Somebody, listen, we like to have a lot of fun. We make fun of each other. It's all great. But I am here to tell you that, man, I can't think of anybody who I have more respect for and have seen develop into a superstar right before my very eyes than Mr. Steve Strazza. Steve and I met about, probably 10, 11 years ago, something like that. Steve Strazza was actually a client of mine. Steve Strazza, a client of allstarcharts.com, which I'm the founder of, and I was the market strategist at the time. Here we are 10, 11 years later now. Steve Strazza, a former client of All Star Charts Research, is now the chief market strategist of All Star Charts, runs the whole thing, and I have literally witnessed the entire thing from day one till now. And Steve Strazza reaches out to me around 2015. He can confirm the exact date, and he's like, oh, I'm interested in this. And I was like, all right, you want to come over? Meet me in New York. Come to this conference that I'm going to be at. It was a CMT conference. Come to this. And, I'll take you seriously if you come, right? It was kind of one of those. Like, yeah, this guy's probably not coming, right? A bunch of lazy people never do what you tell them to do. Read this book and then call me, I tell people. Say those, come to this. Guess what? He came. And there were all these people that he, grew up like learning from and everything like that. They were all there. He's like, this is fantastic. And then Steve Strazza comes from a much different background. Mr. Strazza, was a CPA. Auditing these financial institutions, the banks and the hedge funds and all these companies. Like, he was in the weeds. And he just, risk management was not his area of expertise at all. And that's what brought him to technical analysis. So, when you talk about somebody who is literally trained from the beginning as a fundamental guy, a CPA, a guy who actually understands all these financial statements that people pretend to understand, right? He actually does, right? It's what he did, right? This guy's looked through so many financial statements, I can't even begin to tell you. So then when you combine that experience, right? Literally being an accountant for Stephen Cohen at SAC Capital, right? Auditing, working at a big four and auditing all of these hedge funds and all these financial institutions. I mean, you want to talk about somebody who knows this stuff, right? And then you combine that with his expertise that he's developed over the past decade plus in understanding price behavior, literally hanging out with me every day. Something's got to stick, right? And then developing his own methods, right? Because Strazza and me are not the same, right? We have different time horizons. We have different strategies altogether. We're just different. We're trained in a lot of similar ways, at least on the technical analysis side, but we are very different. And what he brings to the table is incredibly complementary to anything that I can ever do. So I have so much respect, particularly from those who look at the market differently than me, right? And he is certainly that, trained very differently than me. Like I got into technical analysis 20 years ago. I stuck with it, and that was it. He started from a whole nother universe. So guys, I want you to stop whatever you're doing. Like, seriously, like, you are in for such a treat. Like, seriously, this guy is going to break down like how to look at earnings and how to make money from this in the safest way, like literally the safest way, while at the same time putting ourselves in a position to make as much money as possible. So stop whatever you're doing, grab your notepad and your pen. You like to take notes like me. I'm a note taker, guilty, right? If you're like me, get ready to take notes. Seriously, I could not be more proud and more excited for you. Ladies and gentlemen, let me bring on Mr. Steve Strazza, the man, the myth, the legend, talking about how to turn earnings into breakout trades. Welcome, Steve. Thank you for being here.
How we doing? Thank you, everybody, for being here. It's funny, JC. I think that was probably 2015, 2016. I sent him an email. I said, I know the fundamentals so well. I'm doing this incredible financial statement analysis. Like, look at it, but I can't make any money still. I was like, help me. But I think, and I'm so psyched for today, because really this feels like the beat report, what we're going to be talking about here today, how to turn earnings into breakout trades, has really been a lifetime in the making for me. You did a great job explaining why I feel like everything I've done in my life up until now has prepared me to do this kind of research and make money off of these kinds of trends. So this is just awesome. This is a dream come true for me.
Somebody was asking you and me, Steve Strazza, I believe it was last week, was there like an aha moment? Like, was there like a single moment where you realized this doesn't work? It's got to be like this. And you and I were both like trying to explain, no. Like, it's experience. It's like trying all of these things that just don't work and then finally being like, right? So it's not like one moment. It's just years and years of pain and suffering and doing it the wrong way until you finally realize, oh, it's like this. Let's do it like that. That's way better, right?
It's absolutely right. It's not just one moment. It's you do things wrong, then you try something new, that ends up being wrong, and you learn every step of the way, right? So I've done 10 things wrong leading up to an aha moment where it's like, oh, you got to blend all of these different things together now. So really, it has taken some time. And just recently, too, I mean, going back to the beginning of my career when I was really getting into earnings, it's funny. At my parents' house, my office in my parents' house, I started collecting the annual reports. Remember, they used to send these things to you if you were a shareholder in a company at the end of the year. So I have a bookshelf full of them. And we used to actually go through with like, pencils, JC, and rulers and mark them up with our calculators and stuff. Now, the tools we have are so incredible. We can crunch all these earnings in an afternoon as they're coming out, not just with because all the earning stuff is electronic now and you can access them on the internet, thank God. But the AI tools that we have, gotten just over the past few years, we can do so much more with this data today than even when I was starting in my career. So, like, there's just so much opportunity here. I want to dive right in and talk about it.
All right, let's see it. Thank you, Steve. Appreciate you being here. I got my notepad. Let's see it.
We got the deck up, the slides are up. Again, thank you all for being here. I'm so excited to talk about this new research with you all. We're turning earnings into breakout trades. We're not trading earnings, right? But it's a simple strategy for finding the very best stocks, right? Timing them right, optimal entries, making the biggest gains possible with a good degree of risk management, right? With top class technical analysis blended in. So it's simple. It's a repeatable process. It touches on a number of different things, which we'll get to in a couple slides here. Really, we are blending the fundamentals with the technicals, right? The earnings with the sentiment, the earnings reactions, the stories around these stocks, how the market's treating them. We're taking a holistic approach here to really ultimately make as much money possible in the best trends in the market. That's really the idea at the end of the day. So we're going to identify which companies deliver the kinds of earning surprises that move stock prices, in the way that's beneficial to us. The ones trading and investing in them, we're targeting 3x, 5x, 10x returns, over a year or a cycle by really picking the best stocks at the optimal entries, just as the trend is reversing, sentiment's turning on these names, right? The fundamental stories there, and we'll catch the biggest winners, biggest gainers in the S&P 500. Always beat report stocks, right? Stuff like Palantir, AppLovin, Robinhood, Nvidia, some good recent examples. That's not enough. We're also going to earn, additional 3x, 5x, 10x returns over the short term, trading these names around their earnings reports. So the best way for me to really illustrate what we're doing here is, why don't we just show my favorite example from this most recent cycle. This is Palantir. Right? It's a special stock, and everybody knows about it now. But there was a time when this thing was in an 85% drawdown at the 2023 lows, and nobody wanted it. We're watching the chart at this point. We're paying attention to the earnings calls. Palantir is one that's near and dear to my heart because I used to do the accounting actually for this company over 10 years ago. I was working at a hedge fund, and we were the largest investor in the company. So our accounting department actually was responsible for their books. And I'll tell you, the hedge fund manager at this company, he would have special meetings to talk about his Palantir. It was probably one of his biggest stakes at the time. And he absolutely loved this company. So we talked about it a lot. I knew all about it long before it came public in 2020, 21, whenever that was. So I was always interested. Problem was the market wasn't agreeing that this was a bullish story at all, right? So this 85% drawdown, stocks trading, in single digits. And all of a sudden we see a big free cash flow pop on one of their earnings reports. This was back in February of 2023, so it would have been the Q4 22 earnings report. And all of a sudden the free cash blows out, market rewards them. We're saying, okay, starting to see some evidence of a turn here, in this chart. So we're starting to check that technical as well as fundamental box. Here it is, Barron's reporting. Palantir stock soars after reporting its first profitable quarter. We love seeing a company turn the corner and go from unprofitable to profitable, especially for the first time. That's exactly what's going on with Palantir. So this would have put it in our beat report universe. We're watching it closely. Then the next quarter, this is in May, we see another big breakaway gap on earnings, right? The fundamentals are really turning here. The growth rates are insane. They still are today, believe it or not. And then from a sentiment perspective, as all of a sudden, Palantir is becoming one of those stocks that the market's rewarding and getting most excited about each earnings season. You listen to the news, they're talking about Palantir like it's some sort of agent of evil, some crazy Republican stock. Peter Thiel is the Antichrist. You can't trust these guys. They're spying on Americans, working for foreign governments. What is this crazy company? Sentiment could not have been more sour, right? So we're looking at the charts, we're looking at the fundamentals. We see the way the market is really, catching on to this story, right? And starting to get super bullish, rewarding the stock big time after earnings. And then all of a sudden, it became a beat machine. Beat, raise every quarter, free cash flow blowing out, earnings blowing out, the revenue growth for Palantir better than anything in the market right now. And this has been going on for years, but we caught the turn here. What we did was we made, here we go, 1,000% just in the common stock, at least in around 17 was our cost basis in this trade. And that's great. And then, this is like an earnings matrix that you'll get as a Beat Report member. We'll do this for all of the stocks in our model portfolio, but really any of the stocks that we're tracking, right? Because this is really the earnings trends that we're interested in, and more on the right-hand side of this table than the left-hand side, right? This is everything you're used to seeing, EPS and revenue estimates versus actuals, right? We got some growth rates here. You got the pre and post earnings drift. That's typically what we're trading. That's typically the periods that we're going to trade when we are trading options in this strategy. But it's really our reaction score, which is a proprietary score that tells you how the market rewarded Palantir for whatever earnings report we're talking about. So we're adjusting for the stock's individual volatility characteristics as well as the action in the broader market. And boy, we'll get some gems from just tracking this score, right? So a stock like Palantir, if it's used to moving a lot on earnings, we're adjusting for that. If the broader market's down 3% for whatever reason, the day they reported earnings, we're adjusting for that. So you could see how when Palantir turned the corner, this is that February quarter we're talking about. Started being up 20%, 23% every quarter, took a little breather this next one, then 20% the next quarter, 30% the next quarter. These are exactly the kinds of stocks you want to own for the long term. The ones that consistently come out, beat, raise, and get rewarded. This is what the chart ends up looking like, right? We buy this turn here. Beautiful primary trend reversal. You could see, basic indicator of long-term trend here. This is a 200-day moving average. We could drop a VWAP here too, and you see a similar entry point. So you see that big old base, beautiful trend reversal. We know now the path of least resistance is higher. This is one that we're going to be in. Trading the common stock, just this cycle, you could have turned $1,000 into $11,000 with our entry, $2,500 into $27,500, or $5,000 into $55,000. Okay, so that's good money, right? In any portfolio, that's fantastic. Should be happy with that. But the truth is, it's not good enough, because when we identify these leaders, we know there's more that we could do. We know we could be making a lot more money than just trading the common stock, and we do just that. So if you want the life-changing gains, you'll get those 10 baggers here. You could buy the common stock. You could sit back, let them dance. Really low maintenance kinds of trades, but we're also going to come in and hit the best stocks in the market around earnings, and we're going to trade calls, and we're going to make money on the big up waves that come along the way, right? If you look at something like Palantir here, you could buy the stock on the trend reversal, but how about all these waves along the way? Imagine if you own calls or some sort of leveraged vehicle, right, that gave you extra exposure, like a cherry on top, right? Just to make sure that you're making the most money in the best up legs along the way in the best stocks. That's exactly what we're doing here. So we want to win big. We're going to squeeze as much juice out of the best ideas as we can. And obviously, we're going to go to the options market to do that. So let's talk about some examples. Here's where we bought the first calls, right? You could see this on the longer term chart right here. Right? Came out of a nice little base here. Right, climbing up the right-hand side of an even bigger base. So we get in and buy the calls. I remember this very well. This was in August 5th. This was that Bank of Japan day, the yen yo-yo. Right, all sorts of market volatility. Broader market had really dipped. Right, this became a very nice tradable low for the S&P 500 and all the major averages. Palantir comes out the very next day after the market has bottomed, puts out a great report. The market loves it. It gaps higher. But we're used to this stock rallying 20, 30, 40%, right? In the days after earnings, it was up, I think, about 10% here this day. We see the little scoop and score, beautiful technical pattern. We see volatility is compressed. Palantir hadn't just been in a compression phase, but actually, took a pretty hefty drawdown in a very short period of time, falling from almost $30 to $20 a share. We come in, we buy this was the September 20th, 31 strike calls. We pay about 70 cents. 2 days later or 3 days later, we sell those calls, half of our position for a double. What that does is it gives us a free ride. We return our risk capital. That way, whatever happens next, Palantir falls off a cliff the next day, we're not hurt. We actually break even on the trade. A lot of times, the way it works out is you make a little bit of money because, if you're selling something at a double, you're typically selling it at 110, 120, 130%. Sometimes you get 200%, right? We'll take half off for a triple. That way, whatever happens next, we're making money no matter what. So Palantir from there goes on to, rally well into almost $40 a share. Calls become worth over $3. We make about 350% in, I don't know, a month and a half here, 45 days. So that's exactly what we're doing as a kicker system to the anchor positions, the common stock and Palantir along the way. And we'll do this maybe not every earnings season, but every time the setup is there. We'll go back to these quality beat report names and we'll just run them higher through their big rally phases. So here's what we did. If you were in this one, we turned 1,000 into 3,440, $2,500 into 8,600, or $5,000 position into 17,000. Then this past year, this is coming off the little, tariff situation that we had in Q1 and Q2 of 2025. Market was bottoming. We said, what's the vehicle, right, to trade what back then we thought was going to be a V-shaped bottom in the broader market? What should we trade? How about the best stock in the market? How about we go back to Palantir? You see the Strazza indicator, the volatility compression at an extreme low level, right? We're taking back the VWAP from the pivot highs here, the Q1 highs. This looks like a breakout in the making. So we come in on April 11th and we buy the May 2nd $100 calls for $2.15. This base completes, a day or two later. Really 7 days later, the calls double. We take our initial risk capital back. Now we got a free ride. And here's what happens next. We make 537 over the course of the next 21 days, right? So, and then we're out of this 3 days before Palantir's earnings call. We're not holding the stock through earnings, even though it's probably going to beat and pop. Calls get expensive. There's a situation there. We don't want to be there for that IV crush, right? So we're going to trade in those periods most of the time around earnings. So in this one, we booked these profits and closed this trade 3 days before the next earnings call. This one would have resulted in $1,000 in a 63.70. $2,500 position would have quickly turned into 16,000, or a $5,000 position would have given you a return of almost 32,000.
All right, Mr. Strazza.
Cool.
This is great. This is good. Well done. I was there for all of those trades, participated in a few of them, but I know there's a lot of folks out there listening. Well, if it's so easy to do this, making money trading earnings, then why isn't everybody doing this, right? Like, seriously, like how is it possible? You had a double overnight, you had a 237% gain, you had a 530% gain. Like, how is it possible that stocks are able to go up despite what happens in earnings, despite beating forecasts? Like, I have been in the position where I buy the stock. They beat on the top. They beat on the bottom line. They guide higher. Couldn't have been better. And the stock still goes down and the option gets smoked, right? Yep. Like, I've been there. I know you've been there, right? Like, I feel like if you're a trader of any kind, you have to be there. It's like a prerequisite. It's like a rite of passage to understand that, to be able to finally realize, well, there has to be another way.
Absolutely, right? Because if it was as simple as we all wished it was, a stock like Microsoft wouldn't be down 12% today after an incredible earnings report. So we see all of these situations. And JC, that's where the sentiment, the narrative comes into this beautiful little Venn diagram we have here. We're talking a lot about the fundamentals and the technicals, but it's not that simple. Like you're saying, a lot of times a company comes out, the fundamentals are great, double beat, raise, but the stock's down. What's going on? That's the sentiment. Right? That's this third little bubble on the bottom here. So we are not just tracking, okay, how good was revenue? What's the revenue growth? Did they beat the street's estimate on sales? Okay, how about earnings? We're not just tracking that. But on top of that, and after we do all that, we're saying, now what does the market think? Right? If they beat, raised, stock should be up. What if it's not? That's actually an excellent setup and gives us a ton of information. In fact, from a long perspective, we like to see it in reverse, where a company comes out, misses, terrible report, but the market's rewarding them, sending the stock higher, right? So we'll come in. That's a lot of times the turning point in these long-term trends. So we'll come in, we'll identify those opportunities. And then what you tend to see is after the turn, right, a company might get rewarded for bad reports because the market's looking forward 2 or 3 quarters to that, report that's going to be good in the future. Then you get to the meat of the trend, right? The stock might reverse trend, enter a new uptrend phase. And then what you do tend to see is the company's beating, right? Putting out quality reports, good results, and the market is consistently rewarding them for it. But there tends to be a time where the trend is turning, where that earnings sentiment can really come in and help you because the market's saying one thing despite the numbers saying another. So investors think earnings information gets priced in immediately, but it doesn't. We have this post-earnings and pre-earnings drift situation, which tends to be the best time to actually make money in the short term. So price often moves before the earnings call. We see that all the time. They'll pull some earnings gains forward. We're aware of that. And also just over the years, listening to maybe too many earnings calls in my life and tracking this data in such detail for so long now, you get to know the character of these stocks. You get to know the nature of how they react. You start to understand what exactly is the market looking for. It might not have anything to do with the top line or the bottom line. It's the futures orders. It's the net interest margin. Different industry groups have their different nuance to them. And if you do this for long enough, you get to know them. You get to know exactly what it is. Oh, Nike's on again. I know what to look for. Oh, Apple today. I know what the market's looking for in this one, right? So when we really study these names and dive in, we get to know them. They're like our friends, okay? And we know exactly what the market's looking for. We know what the market is likely to reward them or not reward them for. We know if the market's looking through to the next quarter, right? So we're paying attention to all of that stuff to try to make as much money as we can in both the long-term and the short-term trends. So everybody else can overpay for short-dated options and trade them through earnings. We're probably going to trade the waves before and after. You save a lot of money on the calls that way as well. Once you learn how to trade earnings the right way, you'll start seeing results almost immediately. So let's talk about some other examples because I think that's really the best way to illustrate what we're doing here. This is Applied Digital. Say, okay, how could you get into a stock in the beat report if fundamentals matter? That's not even profitable yet. Well, we're paying attention. We're paying attention to everything. Applied Digital came out in, late 2022 and said, we don't want to be a Bitcoin miner anymore. Nobody did back then. We're not going to be a Bitcoin miner. We are going to be a data center. Okay, that's interesting. A couple quarters later, they really did become a data center. You see the revenue growth start to blow out. Wow, this is a real business. Very interesting. These guys are probably going to turn profitable someday in the future. Puts it on our list. Paying attention to the sentiment, the news flow, listening to the earnings calls, what they're saying, the way they're transitioning their business, right? And we catch a 700% winner on just a textbook trend reversal here, and a name that was pretty much left for dead in some old broken down space, but had transformed its business and done so very quickly, giving us big opportunity. We turned $1,000 into $8,000, could have turned 2,500 into 20,000, or 5,000 into 40,000. Just trading the long-term trend in this one. But again, that's not all we're doing here. Now Applied Digital is on our radar. It's in our beat universe, right? We're paying attention to this one. We're watching every earnings call. We know the way that it acts in between its earnings calls. We see this nice little base. We see volatility compressed to a low. This was July 24th. We bought the September monthly 15 strike calls. Seemed like, wow, they're crazy out of the money, right? Well, we sold a double on a 31% earnings reaction not long after. And then we cashed out up 360% in under 2 months. Stock had run north of $20 a share at that point. We're going to trade the waves along the way, right, because those will be the kickers to really make the most out of these mega trends. So if you were in this options trade, you could have turned $1,000 into $4,600, $2,500 into $11,500, or a $5,000 position would have returned you $23,000. Maybe my favorite example of all is China. We could do a whole call just talking about the sentiment on China and Alibaba when this major trend reversal was happening. But what really stood out here was that Alibaba turned the corner fundamentally, right? Their earnings growth was negative for 5 or 6 quarters. Things were not going well. Chinese economy hit pretty hard. Chinese stocks were as out of favor as I've ever seen in my life. all of a sudden, the fundamentals start turning, the price action starts to turn. You start to see the evidence of a big rounding bottom reversal pattern here. Alibaba is now on our list, something we're interested in. We bought the trend reversal in this one, but we also traded the calls. So on August 6th, we bought the September monthly 135 calls. We paid $2.35. You had a nice little consolidation phase. A couple days later, we sold the double on earnings. This is a good example of one that, boy, sentiment was so nasty. The calls were cheap. We said, we're going to trade this one right through earnings. The reactions have been really good. The earnings trend is improving. The technicals are there. Okay. We're going to ride this one through the earnings report. And look, we get, calls up 1,200%, and we're netting a trade of 684% over the course of a month and a half. Do this over and over and over again with these beat report winners. If you were in this trade, you could have turned $1,000 into $7,800. A $2,500 position would have netted you almost 20 grand, and a $5,000 position would have returned you almost $40,000. But we weren't done yet. This is a trade that we're still in right now. On January 2nd of this year, we saw BABA. We also saw what was going on with some other Magnificent Seven stocks in China. And they were all starting to move higher. And Alibaba was still sitting here around its pivot lows. We said, nope, Alibaba is going to dig in here. There's a big rally phase coming underway. So early January, right at the turn of the year, we bought the February monthly 170 calls. We paid $3.70. About 10 days later there, Alibaba dug in at that big support level, big green candle, calls doubled. We return our risk capital, take that free ride. And where we are today, the calls are up 334% at $16. So we'll do this over and over and over again with a stock like Alibaba. In this one, so far, 1,000 would have gotten you 4,300. 2,500 would have gotten you almost $11,000 return, and a $5,000 position would have gotten you about 22,000. What do you think, JC?
Mr. Steve Strazza, when it comes to this sort of thing, it amazes me how many times you could come back to the same trend, right? Because from a fundamental standpoint, as you're pointing out, you haven't seen big changes, but it's the market dynamic that still doesn't believe it, right? So while you're seeing it and you're seeing the market rewarding companies that it wasn't rewarding before, that's likely here to stay. So you're seeing it again and again and again, right?
And love seeing that, right? And one of the best things you could do is find a structural uptrend, right? And then just trade the waves along the way. I mean, people say the greatest technicians in the world will tell us, hey, the cheat code here is to buy weakness or buy corrective waves within the context of primary uptrends. So we identify the top primary uptrends, and then we look for that weakness. We look for those consolidation waves to get in and trade the calls at the right time to really hit those up legs that you get over and over and over again along the way and over the course of a primary uptrend.
Now, I can tell you for a fact that Steve Strazza has had a front row seat to how these financial institutions are doing what they're doing. Strazza saw every single trade. I mean, how much money in trading do you think you saw throughout your career, or even, in a given year?
A lot. I mean, I worked at some of the biggest long short funds in the world when I was younger. So, I saw teams that were probably doing similar things to what we're doing here, kind of fusing fundamentals and technicals, and then trading the waves along the way. That's what these big money shops do.
And I can assure you, because Steve Strazza wasn't just looking at the trades, but he was looking at all the money that they're spending. And, the largest financial institutions in the world have both, the money capital and the human resources to be able to have these massive systems to be able to make these kinds of trades possible, right? So I want to introduce you to the Beat Report, something that Mr. Steve Strazza here and the rest of the team have been working on for 3 years. I can assure you it's longer than that. There was certainly a lot of experience prior to actually putting their heads down and building it. And I've seen them. I've been hearing about this Beat Report for years. Oh my God, this is the greatest thing ever. This is the greatest thing ever. And now we're actually seeing it. And we're actually seeing it play out in real time. And the Beat Report, which Steve is about to explain exactly what it is, really offers a very easy to follow strategy. This isn't complicated. There are more complicated matters that are being used to find these opportunities, most definitely. But as far as execution, I really like the simplicity of being able to just follow a simple process and, not look for a little return, but really making 3, 5x, 3x, 5x, 10x returns. And that's what I'm interested in, right? It works. And when we're right, we can make a lot of money. So walk me through what the beat report is exactly.
But if you guys take one thing away from our call here today, it's what JC just said. You don't want to look back and say, wow, I nailed it. I was so right about Palantir. I was so right. They turned the corner, got in at the right time. I should have made a lot more money. I felt that way. I felt that way way too many times in my career. So when we really get one and we know we got a big winner here, we are going to press the gas and milk it for all it's worth. We're going to make as much money as possible in the best trends. And you're also right. This has been a passion project for me. We have taken our sweet time, but I'm in a position now, finally, for the past few years now, we have an analyst team, 8 guys. Right. So we're just diving into all of this earnings data, and it is a lot. It's a ton. Are we leveraging all the new tech tools that we have? They're fantastic for sure. But we got 3 guys working on this all day, every day, going through these reports, going through the earnings data, checking on all these things. This is a massive project. And what we've built now internally is an absolute earnings machine. So let's talk about what you get if you sign up. 2 to 4 short-term trades per month. This is where we're trading the waves, trading options around earnings, right? So you're going to get these alerts that do have the potential to generate these 3 to 10x returns. We just walked through some really good examples. For new members, we already sent our first one, I think, a day or 2 ago, right? We're trading some big techs through this earnings season right now, and we're actually looking pretty good on the position. I wish I could check my live charts. I think we're looking really good on the position right now, actually. We're going to do a weekly live call every Wednesday, 11 o'clock Eastern time. This is personally my favorite thing to do with members. We do this with Breakout Multiplier now. We get, we all get in the room. I'm checking the chat. I take Q&A. We'll talk for an hour, hour and a half. We'll talk through everything. What we're watching, our new trades, right? Whatever the big themes are, we'll tell the big stories about, our high conviction picks. We'll talk about the stuff we're trading, how we're getting in, how we're getting out, how we're managing winners, yada, yada, yada. All that stuff. You come, you bring your questions. We all figure it out together. This is going to be the single best and most helpful thing for members. We're going to have a model portfolio tracker. It's already set up in Rangefinder. It's super cool tech tool. All of the positions that we're long, both common stock and calls, might be leaps too, might even be warrants. They're all going to be tracked in Rangefinder. You're going to see your portfolio right there in a live dashboard. We're also going to have bi-weekly buy reports, right? So 2 times per month, you'll get an email with a new trade idea. We'll talk about current trades, what's going on in the broader market, what we're thinking about different trends, some areas or some stocks that we're stalking or watching or interested in getting involved in. And we'll provide ongoing education to make sure that you guys get the best results and are able to make the most out of your membership.
And this is, guys, this is very well done, Steve, and you did an excellent job explaining it. I've seen all of this, right? Like I was literally watching the sausage being made. So, I've seen this. We've had the trades coming around internally. I've obviously had the privilege to have taken advantage of some of these opportunities. This is actually the first time, guys, if you're listening out there, is the first time this has ever been open to the public ever before. And I couldn't be more excited for you to take advantage of this. The Beat Report is a systematic framework for how to make money consistently. And when you do the math, in the safest way possible, particularly for this types of earning strategy, where if we're right, we can make 3x, 5x, 10x returns. Because as Strazza was saying before, guys, and this is so important for you to understand, a trader's biggest fear is not losing money on the trade. You know that going in. If you know anything about baseball, like you're good with that, right? The greatest baseball players of all time, the greatest hitters, they failed 60% of the time. No big deal. But when they were right, they were really right. Greatest traders of all time will say the same thing. The biggest fear for a trader is when you nail it, not making enough money when you nail it. That's the biggest problem. And this strategy solves for exactly that. To me, that's the most important thing. So why don't we walk through what everybody gets as a member of the Beat Report. You're looking at roughly 5 to 10 high conviction trades a year. Yeah. And then trading around that.
So that's like our best ideas portfolio, right? This is your Palantir, your NVIDIA, your AppLove, and your Robinhood, like the big, big growth stories every cycle. We're going to put them in their own little special box and say these are the special ones, right? And then totally we're going to trade around them, just like these Alibaba and Palantir examples.
So you're doing weekly, monthly videos, weekly member videos,
Yep.
And then the big deep dives, which I really, really like a lot. Can you walk through
Yeah.
that?
And we're going to dive into like full industry groups. Right now, we have a couple for software. We're working on some Brazilian growth stocks, right? We're going to dive in, tell the story about the industry group, outline some of our favorite trades, throw them into the model portfolio, and then we'll also trade the waves around these names, right? So we got the 5 to 10 conviction picks and the best ideas. Then we have a broader long-term portfolio. And that's really our pond that we're going to go to for these shorter dated trades.
All right, so
And
you
the
got
tech
the access
tools.
to the model portfolio. You get access to
Yeah.
all of the individual trade alerts in real time, weekly videos with Mr. Steve Strazza. And as always, anything here at Stock Market TV comes with a 30-day risk-free offer at any point that you decide it's not for you for whatever reason. No big deal. 100% of your money back. So when it comes to a risk versus reward profile, I couldn't think of a better one where you literally have nothing to lose and everything to gain on the upside. Let's talk about, the founding members of the Beat Report are getting access to this at a 75% discount. I mean, this is spectacular, Steve. So anybody who signs up today is getting 75% off the retail price. So you're saving $3,000 a year. You're only paying $9.95 for the year. This is from $39.95 for founding members. And if you really want to take full advantage of it and you really want to be here, and I highly encourage you to do that, the best value is clearly the 3-year membership, where this is a $79.95 offer and you're getting it for $19.95 for 3 years of the Beat Report. Wow, that is 12 quarters you're getting of all of the trades going around, a very consistent place to find opportunities, obviously around earnings. So you're getting the best compounded value really is the 3 year. So 1 year, $9.95, that's down from $39.95, or a 3-year plan for $19.95, and that comes down from $79.95. You lock in this promotional price and you keep this price for as long as your membership is active. Nice work.
Who came up with these prices? This is too cheap, my friend.
No,
But,
you were telling me the same thing. I mean,
wow.
Strazza's like, this is
What are
3
we doing?
years of work. This is a lot of people. How is this so inexpensive? And, I think that the right answer is what you said, is that, listen, we want the right people to be in there. We want the right people to benefit from it the most. When this is a much higher price, those that are in early on the ground floor are certainly going to be rewarded, right? Isn't that how we want it to
out.
be?
Yeah, and you come in here and hang out because we're hitting the ground running right now. Earnings season just came underway. This is really the first big week of earnings season right now. That's why we're doing this event when we are. But you come in for 30 days. I bet you we're going to make your money back in some of these options trades right away.
It's funny. You just said we're in the heart of earnings. This is the best time.
This is it.
I got to tell you.
7.
I got to tell you, it feels like we're always in the heart of earnings. I mean, what is it? Earnings season is like 80% of the entire year, something like that. What's the number?
Yeah, it takes a breather for like 2.5 weeks every now and then.
And then we're back. Yeah. Everyone's like, oh, it's the heart of earnings, big earnings this week. It's like very, very infrequently is it not a big week for earnings. So guys, yes, we are in the heart of earnings season, but let me tell you, it feels like we are constantly in this.
Again, I guess. So look, this is a great promotional price. If you like shopping the deals, 75% off. It really doesn't get any better than that. Do we have questions, JC?
Oh, boy, do we. Oh, boy, do we have questions. We got some good ones. See, we're incredibly fortunate. Steve Strazza, I don't want to get his head any bigger than it is, but he is a very smart guy, very, experienced. And so he attracts smart folks, right? Smart people like hanging around Steve Strazza. I've noticed that, right? So you got some great questions in here. What's the average hold on the options trades? Great question here.
We're going to do different things. The trade we just sent out was under 30 days. So we will do that. I think typically speaking, you're going to be looking at 30 to 60 days, right? We're going to be trying to trade those windows in between earnings, but it could be longer, right? If the pattern and the story and the earnings trends dictate us to be in something for 6 months, we will be, right? So we don't have rules. We're not going to be held to a certain time frame or holding period for all of our trades. We're going to do the right thing for our money. But I would tell you 30 to 60 days is what you're typically going to see for those short-dated options trades.
Um, here's another good one. That's a good answer. Here's another good one. How many trades do you think you'll have on average?
We're going to have a model portfolio of primary trend picks. That's going to be about 20 to 30 stocks. On top of that, we're going to have our best ideas portfolio, which is going to be at any time, call it 5 to 10. Definitely no more than 10. And then on top of that, we'll have our options trades that we're doing along the way, and they will be expiring, right? And they'll be rolling off and closing. So I would say you're going to have about 50, JC. You can have up to 50 trades, different time frames, doing different things in different themes.
All right, so about a trade a week. I love that. We're getting the intro page says discover the signal institutions follow before the breakout. Are we getting to that indicator? TBR. So getting a question on the indicator itself. What does it mean? Is it trending up or trending down? Can you talk about that indicator?
Now, we're using a variety of our own proprietary earnings data, and then we do have that coded into like a reaction score and an earnings score, and that'll all be live on the website. So that'll be a part of the tech tools. We mentioned the model portfolio tracker, which is super cool, but we also have two new tech tools that are coming in next few weeks. Our tech team is literally developing them now, and they're so cool. We have a daily watch list of all of the stocks that are reacting to earnings in real time with our reaction score and all the metrics that we pay attention to that you could see in a live dashboard every day, and that'll change. It'll be a new list of stocks every day, right? So today you'd see the Meta and the Microsoft and ServiceNow and whoever else reported last night, Tesla, all on here, moving higher and lower, and it'll show our reaction score and all the drift metrics as well as their earnings data right there. On top of that, we have our universe of beat report stocks, right? Stocks that are consistently beating earnings, right? That we're tracking, the pond that we're fishing in. It's going to be a giant matrix, hundreds of stocks in there with all of the earnings information, as well as our proprietary earnings data all in one place that you could sort through, scan through, filter, and kind of see the things that we're looking at when we make decisions for our portfolio.
Great questions in there, guys. Keep them coming. If you have not signed up yet, I'm telling you right now, this founder's price of 75% off just to make sure that the right people are in there and they're in on the ground floor. And when this thing's exponentially more, you're grandfathered in forever. 1 year of access to the beat report and all of the trades, roughly a trade a week. And I got to tell you, I know this guy. Pretty sure you're probably going to get a little bit more than that. Steve Strazza likes to underpromise and overdeliver, and I like that about him. So, you're talking 50 trades, trade a week, expect some bonuses as well. You're getting a full year for $9.95. This is down from $39.95, and you can get the 3-year deal right here, right now. This is $79.95 retail. You're getting it for $19.95 right here, right now, risk-free. I mean, this is unbelievable. We're getting another question in the chat, Mr. Strazza. A Palantir, is it still a buy right here? Still a buy?
I think it probably fails this topping formation that's formed since late last year. But, a lot of these tech stocks, software stocks have been under pressure. So I think you got to watch it. We will not be buying it right now. It's not in our current model portfolio. It is no longer a best idea. Again, this stock went from under $10 a share when it bottomed in these charts that we're talking about to wherever it is today, up 1,500%. So the easy money, unfortunately, has been made in this one. Right? Will it set up again? Can we get another bear market? This stock was down 85% at one point when we were really excited about it, 2022, 2023. So no would be the answer, but we are finding the next Palantirs, and we're going to be writing about them and adding them to our best ideas portfolio.
Fantastic. We got a question here. I already have a free quarter, so will I have the offer of founder when I had used up the first quarter, the first 3 months? Yeah. Just call Mary, contact Mary, who set you up, and you're good to go. If you're already in, because you are a VIP, there are a few VIPs who already have access to the beat report. You are grandfathered in at the Founders Club. Just make sure to contact Mary, and she'll set you up there. Good question. Steve, will there be a replay to this? Yes, there will be a replay as far as I know. So you can access to this and watch it again, knock yourself out. And I'm saying right now, there'll be a replay. There'll be a replay.
I'm going to send you all 10 emails about it in the next 3 days. Don't worry.
Done. And then Strazza, what is the difference between what's happening here at the beat report and breakout multiplier? What's the difference?
Great question. And look, I know there's probably a lot of breakout multiplier members here wondering what's going on. We talk about beat report. We talk a lot of times. Members will come on breakout multiplier and they say, "Oh, Steve, do you like this one long term?" I say, "It's really not what we do here. It's not what we do. We're focused on 45, 90 days. We're trying to make money this month, this week, this quarter at breakout multiplier." Beat report is basically my long-term portfolio. Are we trading the waves around it? Sure, but these are all quality names, the best stocks, right, that I have in my long-term account that I plan to hold for years and years and years, be in the common stock, maybe add some leaves, maybe buy some warrants, if they're available. But these are the long-term holds. These are my highest conviction positions, and we are trading short-term waves around them in a manner that's similar to breakout multiplier. So if you're familiar with breakout multiplier, you can come over here and you'll know exactly what we're doing with a lot of these options trades. It'll be secondhand to you at this point. But that's really the main difference, JC. Breakout multiplier is just options, all options, very short-term time frame in mind, and we don't care what these stocks are. Sometimes with breakout multiplier, worse is better. We'll pick the junkiest stocks in the world and trade counter trend moves higher. We don't care. Beat report, we're not doing that. This is a quality universe where we're fusing together the fundamentals, right? The earnings data, the technicals, and coming up with our favorite long-term conviction picks.
No, that's a great distinction. Breakout multiplier doesn't have any fundamentals to the degree that in a lot of cases are looking for the worst companies, right?
There's definitely no quality filter at breakout multiplier.
No quality filter, no fundamentals in the breakout multiplier. Breakout multiplier is something that Steve Strazza designed to take advantage of, the trades coming out of All-Star Charts, right? Which is what that is. This is really a fundamental oriented strategy, which is something that I love, which has nothing to do with what I do. I don't know anything about this stuff. I'm a technical guy. Everything we do at Trend Labs is completely different than whatever Strazza's doing here. I'm just a fan, especially being able to watch, the sausage being made, over all these years and really seeing this work out there. Big question here on options. If you're new to options trading, are you detailing exactly what strike price and what expirations you're doing? Like if you're new to options trading, is there like hand holding involved here?
First of all, yes, we are going to hold your hand in a way that's much more active and tactical than even breakout multiplier. We'll tell people there, hey, we're selling the double. Now you're on your own. Here, we're going to tell you when we sell the double and take those initial profits. We're going to tell you what we do with our remaining position, and we're going to send, active alerts about exactly what we're doing. Also, yes, you get all of those details. I'm going to tell you exactly what I'm paying, when I'm buying it, what I won't pay more than, right? If you weren't at your desk to get that email as soon as it came in, I'll tell you, hey, don't pay more than this. And then in terms of breakout multiplier, beat report, we'll have that portfolio tracker too. Right, so that'll make things easy. All of the options will be in there as well, and the actual option strategies that we're using are as basic as it gets in a way that is similar to breakout multiplier. You do not need to be an options expert. You need the most basic understanding of options, and you'll be just fine. We're not doing anything too fancy here. We're not getting into the Greeks. We're not getting into any of these complex strategies. We're not trading different legs. This is options 101.
Getting some chats on, I'm a VIP around here. Do I get a discount? Guys, contact Mary. Any questions that you have, if you already have a relationship with Mary, give her a call. See if you have any credits in your account that you can apply to this. If you are a VIP, if you have been around Stock Market TV for a long time, then chances are you've got some credits in there and Mary can take care of you. So make sure you contact Mary directly if you have any questions at all. I know we got throw up the slide for any questions. You can email info@stockmarketmedia.com for any questions you have on the beat report. Throw up the pricing and what you get, guys. Throw that up. This is it. If you want the best of Steve Strazza, right? If you want the best of him, this is it. It's not just the technicals. It's not just the sentiment. You're getting the fundamental guy. You're getting the guy that was the accountant, Steve Cohen. You're getting the Big Four auditor of all these financial institutions. All these things that Steve learned over all these years that I'm personally always asking him questions about, you're going to get it. right? And that is really, really cool. So as a Founders Club member, you're getting complete access to the beat report, everything that Steve described, from the weekly videos to the big time monthly reports, and really the quarterly reports, but they'll be coming more frequently than that. And then the real-time trades, roughly 50 a year, roughly one a week. I got a funny feeling there's going to be a little bit more than that. This is a $39.95 a year value that you're getting for $9.95, right here as a founding member. And if you really want to take advantage of the 3-year plan, highly encourage you to do that. You're paying $19.95 for 3 years. You're saving $6,000. And let's be serious, $19.95 for 3 years. One trade pays for itself and then some forever, right? That's the beauty of this. You want to talk about a risk versus reward. You got 30 days of risk-free, and then on top of that, you need one trade, and it pays for itself. Absolute no-brainer, guys. Click the link below. 30 days risk-free, and you get the best of Steve Strazza in real time. And it's hard to beat.
No, this is the most holistic research that I've ever put out. It's been absolute passion project for me for over a decade now. JC coming to All-Star Charts, finally learning the missing piece in technical analysis and risk management over the past 10 years was really like that last thing that we needed to make this all come together. And we have taken our sweet time, but we are ready to hit the ground running. And if you come in these short-dated calls, we're already in one now. I think we were up 60, 70%. Coming into today, by design, these trades have the potential to give you 3, 4, 5x gains in a very short period of time. So that's the truth about it. Come in and check it out. Really, I think it's the best thing that we're doing. I'm so excited about it. Why not come try it for 30 days? I think you're going to like what you find.
And you're the first one to see it, right? I mean, you're the first one outside of a few of us that have gotten access to it since the beginning. But man, you're the first ones to see it. So get in there, take advantage of this discounted offer, click the link below, join Mr. Steve Strazza and the rest of the Beat Report community. I love the fact that it's a team effort, you guys, right? Steve Strazza, I overheard the other day, the Beat team, that's what it's called, the Beat team. I kind of like that, I'm not going to lie.
The Beat team, we work very hard. The Beat team,
I feel a little left out that I'm not on the Beat team. I feel like,
team. You could be in the. We would love you to come.
I don't think I'm smart enough to be in the beat team.
You know what? You should come sit in on a beat team meeting. We might change your mind. I think you would love it.
Well, I'll be there at the weekly call, so I'm part of the overall beat team, right? I might not be in there in the weeds doing the data like you guys, but I'll be watching. I'll be there. I'll be heckling you, asking questions, right? I'll be that guy.
I believe you.
Guys, come in, sign up, heckle Steve with me, right? Listen, we give him his flowers. We give him his flowers. He's had a great year. If he wasn't doing so well, then we couldn't make fun of him so much. But he's doing great. Come in there in the chat, in the community with me, and we'll give him the hard questions. We'll give him the tough questions when we're in there. We're not going to make it easy on him. Come in and join me and everybody else. Click the link, and I just want to give a big thank you to Mr. Steve Strazza, the entire Beat team, for years and years of having to put up with Steve to build all of this, to be able to bring it to you. And I want to give a shout out to everybody out there in the audience. You could have been anywhere in the world, right? You're taking time out of your day, to try to get better, try to understand an important concept better. So kudos to you. Like, seriously, like, you could have been doing anything, but you're here, listening to, a master at work. So kudos to you guys. Big shout out to Steve Strazza. You were able to explain what could be theoretically a complicated subject in a very, easy, digestible way. Be able to implement a simple to follow process to be able to take advantage of it and capitalize on the very consistent additional volatility that we see this time of year every single quarter. So thank you very much, Steve. Thanks to all the producers for getting this done. And I am JC Parets, and I'm just happy, to learn something like everybody else, right? I'm a simple man, Steve.
No, there's nobody I would, it wouldn't make sense for anybody but you to be on this video kind of launching this with me. So I'm so excited. And I'll end with, seriously, guys, thank you all for being here and listening to us rant for the past hour. If you want to make the most money in the best stocks, come join us at the Beat Report. See how we do it. I think you're going to love it. We're going to make a lot of money here.
Love it. Thank you, guys. Thank you, Steve. Thank you, everybody in the green room for taking care of this and, making it look so nice. Thank you, everybody. Give Mary a shout out if you have any questions. She's standing by. Adios.
Call her right now. Don't wait.